Good morning, everybody, and welcome to today's episode of Market Check brought to you by BB. There is no second best daily YouTube live stream to talk about markets. Welcome, guys. Hope you've all had a fantastic week so far. I know I say it probably around Thursday of every week, right? But it's like these weeks just fly by when you work in markets, and this week is no exception, guys. But welcome. I'm Snorlax. You also know me as Tommy. I'm joined by Max, Jackus, and Dr. Will's Outlook. Tucker should be joining us shortly as well. But yeah, a lot of things to dissect this week, obviously. I know Bitcoin it's kind of like equities and Bitcoin role reversed from yesterday. Equities were red yesterday. They're green today. Bitcoin was green yesterday and red today. Ultimately, I think kind of locally speaking, what we're seeing is a little bit of chop before we see more firm directionality. But before we can kind of break that down more granularly, before we can start cooking and sharing all of the alpha that we have been, just kind of sitting on, I'm going to ask you guys to smash that like button for us. We always appreciate when you can do that. And you guys have done a really good job so far this week. I really didn't see what we ended the last stream with, but we didn't bug you yesterday. We might bug you a little bit more today. Regardless, we're going to do our best to give you guys a great show and cook you up as much alpha as we possibly can. But I mean, we can talk about Bitcoin, I guess, first, right? Or we can talk about equities, because equities were down, I think, 2 or 3% earlier in the week. They are giving some bounce back as of today. Well, I guess maybe they weren't. Maybe they aren't. They were giving some bounce back earlier in the day. We'll see kind of how it develops throughout the day. I kind of lean that they will. Because the VIX is green to open the day, and I kind of think they're going to crush the VIX into Friday. But obviously, I do think that would entail equities bouncing as well. Does that impact crypto? I think it'll probably be favorable for crypto as well here into Friday as well. But one of the things we were talking about yesterday was that volatility is beginning to look more constructive than it has on a low and mid time frame than I would say in probably about a calendar year, which obviously is going to impact the equity market. What does that mean for stocks? Nvidia, obviously the NASDAQ, like I said, was down 2 or 3% earlier in the week, but Bitcoin is still trying to continue this squeeze. We've come into, I think, the first meaningful resistance on the chart here. Near 3450, like 3,500 on ETH, and then about $65,000 on Bitcoin. And we are seeing a bit of a reaction so far. So what does it look like over the coming days? I guess we will find out. But yeah, guys, I'm happy to open the floor to talk about these things, right? Equity markets, like I said, I do think that equities will probably bounce from here on a lower time frame. I think that would probably entail crypto does the same into Friday. But until that happens, right? I mean, at least locally speaking, the last day or so have been a downtrend after we've had a massive squeeze in crypto and just a continued acceleration in equity markets. But I'd love to know what you guys are thinking today. Maybe not so different than yesterday, because we are kind of chopping a bit. But yeah, let's have some great discussion today.
Hello, Snorlax. Hello, audience. Thank you guys for being here. Yeah, the market's at a really it's at a really like interesting, kind of awkward spot, dare I say. There's some really good traders that I know that are not so convinced that rally off the low is going to stick. And there's a lot of really good traders that I know that are like, we are never going below that low ever again in the history of crypto. And it seems like there's some very extreme targets to the upside and also to the downside. I've seen a lot of people still and these are, when I speak, understand that I'm only quoting or relaying what people that I respect have said or I've seen them say. I'm not entertaining kind of goofball scenarios. But I've seen a lot of people still convinced that there's, a lower 50s to upper 40s target on the table for Bitcoin. And of course, you can assume what that would mean for ETH and altcoins. Additionally, I've seen calls for new all-time highs here very soon. And I would say that right here, we have Bitcoin on the left, we have ETH on the right. Let's just look at Bitcoin for a moment here. For one, I would say what we've seen so far is pretty constructive price action. I'm actually going to add on some quarter ranges here as well. So you've got your 1, your 0.75, your 0.5, 0.25, and your 1. Things look totally fine, right? What I'm most encouraged by actually, and I'm going to remove this, is this volume profile from the range. So from the all-time high through current price action, you've got a really important level basically right here at 63 all the way down to like 62, let's just say, okay, right in here. And what this level is you've got your basically 4-month point of control and you've got your 4-month value area low of this entire region. So it's a really significant level. Additionally, on top of that, just from a simple market structure perspective, like let's mark this out, okay? Let's mark this out just to identify the trend. Actually, let's do it like this. So here's your uptrend, right? Kind of losing steam. Then you enter a downtrend, right? And I'll thicken this up. And now it appears as though you're potentially in an uptrend, right? So this is the most encouraging part of this entire region, right? Is that you can see that there is a very clear shift of trend right here, where when we got back above this last high, right, before the sell off, before the final sell off, you can see very clearly that we've gotten above that level. We have now shifted to the upside. That is encouraging to me, right? That Bitcoin was able to come back more or less from the dead down here, potentially very like in my opinion, if Bitcoin was really going to sell off, like it shouldn't have gotten back above this region right here. Like I'll remove this red line right now. What I would have wanted to see for like some immediate bearish continuation on Bitcoin would have probably been this supply region, kind of holding like all of this. We should have rejected probably from the underside of this right around here, but we cut right through it. So what I would like to see in the short term is, this was a huge rally right off that low. Like this was a powerful, powerful move. There are some inefficiencies, right? There's also a CME gap, right? Will we come back and fill in the CME gap? It's on the table, but honestly, I'd like to see it probably not get filled for a while. Just like in the last bull market, there were a handful of CME gaps that remained unfilled for like 2 years until the bear market. What I'd like to see right now is this region hold. I'd like to see our 4-month point of control and our 4-month value area low hold on a retest. And additionally, it's this last high, and it's also a 3-day block, 3-day breaker block, like right here. So short term, like what do I really want to see? Like this region, point of control, 3-day block, the last high, we shifted market structure to the upside. I would want to see this region hold. I probably wouldn't want to see us go deeper than like 62. And then I'd want to see something like this kind of carve its way out. And that's just generally my thoughts. Like it's an obvious level. Your support. You don't want to see us too much deeper than this high, which again is a 3-day breaker block, which is in teal. Point of control, value area low. Again, it would solidify that we actually have shifted market structure and we have maintained this because the bearish scenario, Jack has had a fractal for it yesterday, which I hated to see because unfortunately it is valid, potentially valid, right? I think the context is key, but this was the fractal that Jackus was looking at right here, maybe somebody else too, but it was kind of this like 3 drive into the low. And what we really want to avoid seeing here for Bitcoin is one, here, I'll make them the same color. 1, 2, 3. We really, really want to avoid seeing that same 3 drive that the equity markets did into that low. That would suck. That would suck a lot. We would not be having fun. But again, you have to recognize that like it's possible, but that would mean that we're right in here. That would mean that we're right in here. And by the way, I don't think that we are in there, but we need to invalidate this fractal immediately, right? So it needs to be Bears have a chance to kind of run this back down this week and weekend, in my opinion, sell it off a little bit. And if they can't do it, then I feel like next week could probably be a prosperous one. But we're going to want to see this fractal invalidated. And additionally, like I'll mark out the monthly open. Like additionally, like this is such an important level as well right here, where we've got our July monthly open right here, monthly open. And the reason it's so important, right, is because here, let me remove these drawings for a moment. If you look at the monthly candle, like the fact, if we can even have a bullish July close, I think your bear thesis gets a lot more difficult because of how this wick settled in here, like how big of a wick there is to the downside. It's July 18th. We have a little under 2 weeks. But we really want that monthly open to hold, right? So maybe we test it a couple more times. It's at 62.7 roughly. Let's see, the exact number is 62.723. So just say 62.7. We're going to really want to hold that 62.7 region, because of what it implies for that monthly level. So again, huge spot of interest, right? 4-month point of control, 4-month value area low, shift of market structure to the upside, 3-day breaker block, and our monthly open, all within this like 63 to 62 region. Like that's your spot. There's no other way to put it. Like that is your spot. 62, 63. So much confluence there, and we really want to invalidate this equity market fractal right here. But those are my thoughts.
Are you looking for a response? Is that what you're looking for? No, I'm just
Well, it is a show with a big panel. It's a discussion-based show. So if nobody else wants to speak, I'll just keep monologuing for 2 hours. But if everybody wants to participate, that's what the show is. So yeah, whenever you want to jump in, Will, or anybody else, feel free.
Yeah, I mean, I would say go back to last week's videos, go back to the week before's videos. I basically said 64, back to 62, 61. I mean, look, there's even potential here to dip into 58. There's potential for that. But I just don't see you going back below support. I just don't. You've recaptured the range.
What is support for you?
So put it on the weekly. Put it on the weekly. Go ahead and draw it out. Now, see that bottom dip that we did there back in March? Or sorry, April, May. Sorry, my apologies. Yeah.
The
May.
bottom of these weekly candles?
Yes. The fact that we made it back above that is very, very important from a high time frame standpoint. And weekly has been the strongest out of all of these. The last time we dipped from the high, we didn't exceed the previous high, but now we're back above the range, in my opinion.
And I mean, Will, what do you think about the 2-week chart, man? That wick is strong, man. I like to see that. I like to see that a lot.
It's strong, but I'm more of a traditionalist. It paints a different
picture. It paints a different picture, right?
I'm more of a traditionalist. I don't like to alter time frames. I like to tend to stay towards the time frame that makes the most sense: monthly, weekly, daily. At least for me, as a trader, I know a lot of people like here's the. And I'm not saying that we do this necessarily or that everybody does this.
It's okay. I do that. It's okay.
But a lot of people like to move towards time frames that appeal to what they're looking for. I always tell people stick to the basics because it makes you less biased. Because if you're always looking for the time frame that fits your thesis, then in that scenario, it can change your thesis while you're trying to wait for something to occur. But I think on the weekly standpoint, just looking at that weekly body low, you've recaptured price range. And unless you can close below that, bearish sentiment shouldn't be there. But I'll give the caveat. If you get below that, you're going to create a doji on the weekly, right? Or not a doji, my apologies, a hammer candle to the downside, a bearish one. So you do not want to see price get below that body and close. At least on that double bottom body for Bitcoin.
I mean, speaking of the weekly time frame, Will, like there's a very obvious weekly level that carries some significance and weight, going all the way back to last cycle, right? If you're looking at this region here, here I'll make this red. Like this is your weekly SR level from last cycle. Like the significance of this level cannot be overstated, in my opinion. Like this is so clear to me from last cycle. it's interesting to see like how it's playing again, right? So when I look at this, I go, all right, last time this region, which is, if we're looking at the weekly, it was basically the top of it was just say about like 60K, right? Like roughly about 60K. The bottom of it, 59K, right? Last cycle, they got us, right? They threw it back above, deviation. This cycle, perhaps it's different where, it's actually now like a bullish deviation to the other side of it, right? Because it looks like this was your bull trap last cycle, and now this appears it could be a bear trap, right? Because of the significance of this level. But I would say if you do get back down below it, then that could be problematic, right? Which you really don't want to see that. I don't want to see sub 60K again, man. Like I do not. I'd be pretty uncomfortable down there given the nature of this recent buyback.
I'm muted. Here's the thing though, Max. Like, how can people be already trying to predict that with no structure break yet? Again, structure broke originally, but we've gotten back above the range. You should be bullish. You should be bullish above the range. I think below the range, you can be bearish as bearish you want. I won't say anything to anybody who's bearish below the range. Even I was bearish below the range, right? But once we recaptured price, which is something we discussed, at that point, you have to be macro, micro, medium term frame, whatever you want to put it, bullish. You have to be. Like, it doesn't matter if it can pull back into 58K. The point being is look for support. If support breaks, then you can be scared, and you're going to get a retest, which means you'll get an exit before that happens. Something we did like this. If this was going to be a swing fail, Max, it should have swung failed on your line you have right there and rolled. It should have rolled under it, not gotten above it.
Yeah, so this is the region, right? I mean, it's just so obvious. Point of control, value area low, and then your weekly level right here.
Yeah.
I mean, it's kind of all the confluence you need, right? I'd be shocked for one if we went down there and sliced through it. You know what I mean? Like I would expect a big battle at a minimum. But also like the context of it, I feel like it's set up to be bullish, but I also know that Tommy, you're thinking that this is potentially more of like a giant drawn out complacency shoulder, right? So like, how do you feel about this discussion with Will's arguably weekly range low, and then also the fact that we did kind of shoot back above a 4-month point of control and value area low? Are you thinking we're just going to lose it pretty quickly and move back down?
I do. I mean, we've kind of come back into the level of the range where I've been talking about that supply being present. I still feel that that's the case, that it's still there. We have a lot of overhead positioning, and I don't know if we have enough buyers to be able to clear it yet. And until we do, I'm going to lean more so in the camp that this is probably going to form another shoulder.
Yeah, I mean, for me, go ahead, Jackus.
I was just adding mic drop.
Yeah, for me, it's just I don't know how you can be structurally bearish here, man. I just don't like. If we would have pit maneuvered that support and the resistance, I think that would have been very bearish. But I think because we broke back above it, it just shows that support / resistance is not as resistant as people think it is. I don't know if that makes sense, but
so the only thing that worries me still is the idea of a fractal like this, right? This, in my opinion, deserves some attention, like no question about it. We saw it earlier for stocks. Obviously, it resulted in a very, very aggressive buyback to the upside. Not too long after. But I mean, that, in my opinion, would be like this, right? I kind of view this is the only like local bear case that, in my opinion, turns to a bull case that I think we could entertain, right? I view this region down here for stocks, if we're going to look at this fractal, the same way I view this little bleep down here. Okay. That, in my opinion, is your bear case. It is slightly different, right? Like the way that I look at this is this fractal for stocks never had a bullish like break of structure to the upside. I wouldn't really count this as like a break of structure. This was like a weird little like gap down candle. Like Bitcoin has had a full on like break of structure. Like we full on got back above that high. Stocks didn't do that, right? So it's never going to be 1-to-1, but like they are a little bit different. They did.
Yeah.
Let me.
Where's the break of structure to the upside?
It's right there where you.
The way that I look at this is down, up, down, up, down, like this.
If you look, yeah, I know what you mean. If you're gonna extend that line that you have on the right side, on the right chart, yeah. Extend it. So no, just to the swing that we are debating, we are at. Yeah. So there above that shoulder, right? Like you had a bounce, you retested that range low, dropped lower, came back above, and then sunk lower again.
Yeah, that was what I was pointing out the other day. Was like which red dot are we at, right? Like we could be, I agree that is the bear case, right? But I don't know. It would be kind of ironic, right? Like we front run the 52K level, and then everybody's like, "Oh, we're back," and then we go hit it. Right?
Max, are you like? We can debate what is going to be the outcome, right? Like it's super conflicted, as I say. But do you see what I mean with that? Like, are you seeing that on the right chart?
Yeah,
zoom in a little bit. Zoom in a little bit there on the right chart, right? You see that?
Shoulder. Yeah. I see that. The structure seems it's comparable, right? Which is why we're looking at it. But obviously, like I view this as a much different style of move because of this region on Bitcoin that got reclaimed. Like I don't see that same region here. Like I view this as more, this was your like range, and then you had like a range, underside retest, rejection, and then up. If that was the case with Bitcoin, like
what about the Nasdaq?
I feel like this is your range and you've already gotten like back up too high. Like we should have gotten stuffed at like 62.
That was my thoughts too. You should have been stuffed a lot lower. Yeah. Like it shouldn't have gotten that high. Not to mention, I don't know why people are I guess so inept about trying to get a full fill here, running it all the way back down. That run up pretty much has been fully filled. I don't know how you can be macro bullish and look at this and be like, okay, we're gonna fully fill that entire run up, and then we're gonna be bullish again. Like, yes, S&P did it, but that doesn't happen in a lot of cases. A lot of cases, you break down that far and you rerun the entire run up, you're not going to return back up. You're just going to continue to keep falling.
Yeah. Well, I mean, put the yearly VWAP on there too, Max. Like that, I think the reclaim of that is not to be faded either, right? Like that's a big
RSI bounced on the 50 perfectly too on the weekly. The RSI smacked the 50 and ran straight off it. Like unless you're expecting a break of structure on RSI too, then I don't know how you can be expecting price to get back down there and fill the entire run up.
Yeah, so here's your yearly VWAP right here on Bitcoin.
Exactly. Like that reclaim is a big deal.
Yeah, huge deal. I don't know. I just see these as different. Like I think it's worth considering. Like we have to consider it. You must
hold the VWAP on S&P. Pull the VWAP on S&P.
You want the same yearly one?
Yep.
Max, what about if you put Nasdaq on the right side of the chart?
Let's do it. I'll just throw this on quick for Will.
That looks identical, bro. Looks identical to what already occurred.
Hang on, let me get these off here.
Doesn't that?
Yeah,
it does. Yeah, bounce off. That's interesting. Well, where it actually bounced off of it right here, and then we had a deviation, and then reclaim.
Mhm.
So yeah, I mean, my big thing is, like I said, like if we're viewing these, this is kind of your distributive range here on SPX. Bitcoin's already back like up here. You know what I mean? Like it just doesn't feel like it doesn't. This felt like a range, underside retest. This is my only thing. This is supply retest, rejection, then reclaim. This feels like mega bear trap, got below this low, and now we're back inside this range, which SPX really just didn't do. It just didn't get that. So I don't know. I mean, what do you think about that, Jack? 'Cause, I mean, I know they're never perfect, right? But
Can we pull up the Nasdaq on the right side?
yeah, let's do it. This is
Maybe
that
like
point.
the maybe type in NAS 100 US because it's the cleaner chart.
From Pepperstone or who?
Oh, at the US there at NAS 100 US, and it puts the O on the chart there because it's the cleanest one. Yeah, and
You want to look at the same time period you're talking about?
yeah, so like this one, right? It seems like it sort of kind of reclaimed the range too, and then there was that like big sell-off to lower, which I still have a problem with. But I feel like the fractal itself is just a tool. It's not something to lean on, but
This actually looks more similar than the S&P 500. I will give you that. This
Not on the VWAP, it doesn't. VWAP's
no,
way
but
the hell far away.
structurally, I see this differently for sure. Because when I look at this, I would view this as your range low. Like here, let me just draw a range.
Can you add underline trend line there too?
Like you want like sweeps of these lows, like
Yeah, but since the beginning, underline trend line. Yeah, but like that, like that,
this.
and yeah, and then if you add the same to BTC.
So I would maybe view this as the initial range, and then it'd be something like this maybe. Because this feels more similar, and like where Bitcoin would be at technically if this fractal plays out is this right here. This is a better example than the S&P one. I would give you that for sure, Jackus.
Tommy, are you as well macro bullish?
Yes, no, I am. I do think that a breakdown from this range would be a pretty nasty unwind to have to like deal with, obviously, if this was another shoulder. So I'm kind of more in the camp that we are going to break the range to the downside, and then after we've kind of cleaned up that positioning, then go higher. But I know that's obviously not a popular take and very contrarian to the rest of the panel, but it's just the one that I'm kind of holding right now. I think rate cuts are not explicitly bearish, but they do need to be heeded if history is kind of a warning. And I'm just kind of going off of my interpretation of where I think crypto is cyclically. Especially in the tech bubble of 2000, right? Like we saw a huge liquidity driven hype cycle in 2000, 2001. And then in the years that followed that, many of those tech charts failed to make new highs. They had ultimately echo bubble like price action. And I feel like I can see that with many crypto charts right now. Cyclically, I almost feel like crypto is in 2007, 2008. And we saw what happened with rate cuts there. Markets had already topped by the time the first rate cut had arrived. So I'm trying not to be super, super pessimistic, right? Because obviously I see the 3 or 4 year bullish thematics, but I am to some degree very cautious of history here, especially with kind of what we've seen from some of those tech charts in the wake of the tech bubble, in kind of the 5 or 6 years that followed that.
Yeah, I don't know, man. I think like looking at 2001 and 2008 and using those as examples, not you specifically, but just using those as examples, we've learned from those situations. We found ways to manipulate the price action to keep it from happening again. And we've put bumpers in place with stocks. And I think that crypto acts like a ultra high beta stock. They know how the stock operates. They know how the stock market operates, and they do a very similar job here in crypto to follow stock markets to a T. And so in that scenario, I don't think a 2001 will ever happen again. I don't think a 2008 will ever happen again. What I mean by that, we won't see a housing crisis. We won't see a
well, I agree. I just think it's different.
everything.
It's different, but I think cyclically there are a lot of similarities. Like you can see
But
it.
you
With
have to
small
have
cap
an
charts, you can
example,
see it
though.
with crypto charts. Like we had a liquidity driven hype cycle, similarly to the tech bubble. You can see that with small caps and crypto, and then you can point at things like ETH, DeFi, and even ETH, right? Because ETH didn't make all-time highs, and a big reason for that is because DeFi USD was unable to do anything other than essentially just have an echo bubble. You look at certain small caps, right? Like I know there are some charts that look like they're trying to curl up, obviously, and break out. They look maybe early cycle. I would attribute some of that price action potentially to echo bubble price action. Something like, I mean, you love Carvana, Will. I don't think Carvana looks explicitly bearish. Let me rephrase. ARK is a better example, right? Like ARK looks the prototypical bubble price action, and ARK has had zero upside. I don't think ARK is early cycle necessarily. I think it is just a Cathie Wood being unable to produce returns in the last 2 years is kind of what I would expect from an echo bubble type of price action, and to work mechanically and functionally.
But
So I
Tommy,
do think there are, I'm not saying it's the same as 2007 to 2008, because it's not going to be a housing crisis. We have a very different market dynamics, guys. But look, like we're talking about the second cycle in a run up immediately following liquidity and hype cycles.
But Tommy,
Where
that's
it has
2017
not been as
too.
prevalent as it was in the first cycle, and it's reflected in the charts.
That's 2017 too, though, right? Like every crypto cycle is a liquidity-driven hype cycle,
Yep.
right?
Well, I'm not comparing it to 2017.
I know you're nitpicking. You're
I'm
saying
not nitpicking. I'm pointing out similarities. Like
I know, but you could
Bitcoin
say
can't break all-time highs. Indices in 2007 to 2008. Where did SPOOs top out? Right above all-time highs.
no, but like if you say 2017 is 2001, then 2021 was 2008, right? Like you can.
I don't really view it like that, but
right.
So if we're focused on the timing of this fractal, by the way, not that it necessarily supersedes structure itself, but from a timing perspective, this would be kind of similar, right? This would certainly be similar. And I guess I would kind of view where we're at right now as, if we're looking at the timing, this shift of market structure when the NASDAQ got back above this high, then sold off a little bit. In my opinion, that would probably be the equivalent of like right here. You know, if we're focused on the timing, assuming that maybe the bottom is in, just looking at it a different way, right? Looking at it a slightly different way, then I would say that this is where we're at right here. If we wanted to look at it kind of around your mid-range, give or take, shift of market structure after, you know, a very aggressive sell-off, both, you know, roughly 120, say 125 days, depending on how you want to measure it. And you could maybe look at it a little differently and go, yeah, it was, you know, this was your overshoot. So
I would say that shoulder that you have there is more like on NASDAQ at 14,800, if you see that one.
Yeah, I think he's given time frames though, and if you look at time frames,
Yeah,
that's how it would match up.
Definitely time frame. This would match up. But if you want to look at the levels, then I would say that the level that you have on BTC is the equivalent of NASDAQ at 14,800 there. Like on that leg up, just this one.
oh, you're talking about like
yeah.
Okay. All right.
Yeah,
I see that. Yeah, I could see that. I was just looking at this as a more prominent high, but I think you could be correct there.
I think that high that you have on NASDAQ is the one at 71.5 in this comparison.
For me, I mean, I think the discussion's interesting. I do. And if we swing fail again here, I'll be the guy that's constantly calling up, but that's fine. I'm okay with that. The issue.
Will's like, I'm going down with the ship. I don't care.
Well, I mean, Will said that many times, right? Like he said, I'm either going to buy a mansion or end up under a bridge.
Yeah, one or the
Which you
other.
have to respect.
Yeah. I think I'm just being honest. Like I'm not even like, I know a lot of people are bullshitting in this space, but I'm being real. Like I'm not selling. Like it doesn't fucking matter if it drops down that far. The point, I guess the biggest point for me is, from a trader's perspective, I could be looked at as a clown for doing that, but it is what it is. I think macro wise, like it just makes more sense to not de-risk your positions in my perspective, because everybody here on the panel is macro bullish. So why am I going to deleverage my position for a 10% drop, 5% drop? Shit happens in the stock market, even a 5 or 10% drop. Now, if we're talking a 30 or 40 or 70 or 80% drop, I'm getting the hell out. That's what I did in 2021, 2022. I got the hell out. I was like, this shit's going to drop, and it's going to drop hard. We're going to no full-on bull or bear market. And I deleveraged in 2022, big time, like almost 100. I think I might have left 2 or 3% in the market when 2022 was coming around. The point being is understanding where you are in the market, and is it time to deleverage in that way? I feel like a lot of people want 100% G'd out of this position, and to be able to catch a 48K Bitcoin. Which one of you in the audience is buying Bitcoin? That's all I'm wondering. Right. And so if you're not buying Bitcoin and your shitcoins are already floored, how much floored do you think that they're going to go? That's kind of the other question. Now, if you're in a multi-billion-dollar shitcoin, yeah, you probably eat a lot of downside. You probably could. I understand that, right? But like if you're in a already floored asset, where the hell are you going to go? Zero? And what's going to be a macro bull run? I don't think so. I don't think so at all. I can't remain bearish here. I can't. Like it doesn't matter if price drops. Macro wise, everything.
Look at this chart, man. Like
you would be shorting that chart. I know you would. I know you would short that chart on that sweep.
Tommy would be looking for this, bro.
Yes, it is over for that chart. Over.
Tommy would want this, bro, right here. He'd go like this. Yes. And then he'd be like, these lows, this liquidity is getting taken, and he'd hammer the ask, bro. Yeah. He would hammer it. I know he would do it. He'd be on hyper liquid, just absolutely market ordering in, just shoving shorts right here. Let's throw on a little EMA. I got Tommy's EMA saved right here. He'd be looking for this, the 1221 retest kind of. I know he doesn't like that. Like this right here.
They trying to turn it around, Tommy.
Yeah, I wouldn't be shorting that setup, but
no.
I would have said it looked like Bitcoin's in like an inverted version of Bitcoin's bottom, right? The bear market lows is just missing the FTX capitulation.
Well, let's
my issue with this chart is that it really didn't reject from the supply there, like any supply.
So, okay, I see what you're talking about. So you're talking about like if this shit right here just didn't exist, Tommy, like the FTX. You're talking about like if this was literally gonzo and the chart looked like this.
Hey, highlight Doritos comment. The inverted chart never fails.
Is this what you're talking about, Tommy?
Yes, more or less.
Wait, how did you hide it?
Me? Oh, I just drew a box and I made the box the same color as my background.
Yeah.
Study being an artist.
That's funny.
I don't know. I mean, I get it. I see it. I view this as let's take these MAs off, right? I know you guys love the 1221, right? There was a very clear trend right here. This feels like a shift of trend, certainly to me. And I would view at a minimum kind of something like where we are right here. right? I would view that as a loss of trend. And if we came into here, you'd probably see it roll over. And then additionally, right, like I add back on my
Max.
I could add this back on right here. And it's like you do have, in fact, your point of control. I'll remove the red line. You've got a point of control, you got your value area low, and you got your monthly open, all kind of lining back up with that shift of trend that we saw. So I don't know. I mean, I don't think it'd be a bad short, right? Maybe you guys see it differently, but
I mean, Tommy, do you remember the red and the blue scenario, right? Like, doesn't that look like red on a high time frame inverted? Like, doesn't that look like the red you drew up the other day?
The red and the blue. What do you mean?
Like the one you put in a few days ago in your channel, right? Like that looks like the red. You know what I'm saying? That's sweet.
Yeah, I mean, realistically, it could only dip down into, you're saying like 50K again, right?
You
No,
say
I'm saying
58.
like you remember it was like low time frame. It was like 64K, and you drew out the red and then the blue, and you were like, if it's red, I'm gonna short the fuck out of this thing. Like,
Yeah.
and that looks what I'm looking at on Max's chart. Somewhat looks like the red. You know what I'm saying?
I mean,
That-
structurally, like that's a swing fail, but that doesn't. I don't really like just trading with strictly swing fails. Like you can get a reaction short, and I'm just using the inverted chart speaking. Like you can get a swing fail short, but I don't know that I would be holding that as like a swing, which in this case, like I don't know if I'd be holding that as a swing long because it still looks to me like, I mean, I guess it could go either way, but I still think the context of you're basically sitting at demand, a huge level of demand where you've had a lot of buyers come in, like they're going to defend their buys, they're going to defend demand. That's how I'm seeing the chart, and what I continue to say. Like now, I'm going to like flip back to Bitcoin's actual direction here. Like I feel as though the supply that Bitcoin's coming into, that it's not going to flip it.
Yeah, but
that.
Tommy, here's my thoughts.
hang on, let Jack, as he pulled this up real quick. Sorry, well, I just want to let him counter my fractal.
Yeah, because he was asking Tommy like that he would be shorting this in a day, you know, but I didn't want to point you out to this little price action back in time because it would take time, so I just pulled it up.
Can you zoom out so I can see where that is on the chart?
That's this one.
Okay.
If you know.
Yeah. Of course I know.
Right?
Of course I know. I've got that chart tattooed in my brain.
I do. Yeah, so like here, it also like this is kind of the, you would short this in a day, right? But then it blasts through because my main issue is that we did not hit any, any supply on this one, right? Which was the same here. The market baited and then went there, right? And then obviously, like this took some time, but locally speaking, I think that the argument of that just because it broke here doesn't necessarily mean that you're going to be shorting this to new lows. But I do agree that like if you're going to get a continuous trend here, then probably is.
Do you have a daily time frame that kind of matches up with that? Because I noticed that was H4 and you got daily into the side.
Like when it comes to fractals, it doesn't really matter that much when it comes to time frames, and I think H4 and daily is pretty close. But I'm not sure. I would pull out some daily example, probably sometimes in history, but do not remember one right now.
I also feel like those two red zones, like one is way more volatile than the other, and so
for sure.
The volatility kind of speaks to demand. And I want to point out just one more thing. I think what Tommy was saying, and that was, he's saying demand is there, so the price would go up, aka down. And I don't think we are disagreeing on that. And that's the thing. I don't think anybody on the panel is disagreeing that there is sell pressure here, right? I think it's just what we're disagreeing on is how deep does it go due to that sell pressure. And again, I think that being above support, we should treat support as support until it's not. And then once support's not support anymore, then we can treat it as resistance. And then we can look for exiting positions and or lower pricing. I just don't feel that being above support, unless you don't consider the support, I don't feel that being above 58K, 62K, it has any relevance to look for further downside than those targets. And then, if we break those, then look for further downside. Does that make sense?
Yeah, I mean, it makes sense. I just think it's kind of like a game of ping pong between liquidity pockets, right? Like you bounce from a level you had to bounce. I mean, albeit on a Sunday, you did it on a Sunday, you ignited momentum and you squeezed a bunch of shorts. And now you're coming into an area where big sellers are likely to step in, which has been my point. I am expecting big sellers to step in here. And so far they have. I mean, it's been pretty clear distribution around these prices for the last day and a half.
I mean, I'll say this too. If, again, I would tell people to go look at last week's video. I literally said this at like much lower price, and I don't remember precisely where we're at. I know we're well below support. I think we were roughly probably in the like 56K range. And I said swing at 64, roll back to 61, 62, because I was expecting a sell demand, right? I was expecting a sell demand in that range, which I think we got a little bit higher than 64. I think we got up to almost 66. And then once we got up to that range, you got sellers start to step in again. But where are sellers selling? They didn't sell all the way from 52 until we hit 60, almost 66. Then they started selling. So now you kind of created that range again. But if they're selling up here, do they continue to sell into support, or do they just wait for price to come back up and sell, wait for price to come back up and sell, and then price continues to find support here and then eventually takes off once it eats to the sellers? And I think that that's something that you should entertain too.
What are the clear signs of distribution that are causing you concern right now?
Well, I mean, even on a lower time frame, I don't think this trend is that strong, right? Like we were kind of talking about it on Monday. If the trend was strong, it shouldn't be letting people take these longs, in my opinion. It shouldn't be. I don't even think you should be carving out like a higher low, right? Like you shouldn't be allowing money to be able to enter the trend. And you see it on a lower time frame already. When we hit 64 for the first time, or when we hit 65 for the first time, right? Like that should not have really given a pullback. That should have maybe pulled back to 64 and given continuation longs all the way up to 72K, because that's kind of already what our expectations are for something like Nvidia. And it didn't. I mean, we trapdoored all the way down into like mid 62. So the bid under the market is really more so just to squeeze shorts. It's not really that constructive, in my opinion. It's
I mean,
letting
that was Gok's distribution news, wasn't it? During Asia, right? Like that was like, oh, Mount Gox is going to distribute, and it nuked $2,000, and then got
we'd already knew before that, though.
But that's what there was like news at the time. Like it like was like, oh yeah, it's starting in 2 weeks or some shit. Like it was like that wasn't like random. I don't think
the thing that kills me about the news though, Hagrid, is when does news come out? Does it come out at 75K or does it come out at 52K? Because I started hearing about Mount Gox at 52. I started hearing about German government selling at 52. Where are we at today? From 52. We're at 60 something K, right? The news that comes out is just bullshit, in my opinion. It's just BS. It's already built into the chart. And, I tell people this all the time. It's hard to tell, people that don't do TA that stuff. But, like, I think that price action was always intended to distribute up here. And we've discussed this. It's just we were anticipating a breakout above 60. We didn't get that. We got to break down below 60. We dipped into 52. I would say look at our 40K range, Max. I don't know
I don't think price was meant to distribute up here at all, man. Like I'm trying to like undercomplicate this all as much as I possibly can, Will, and maybe I'll be punished for that, but I feel as though there's 100 ways to overcomplicate and overthink what's going on in crypto. And there's only one proper way to do it, which is kind of turning your brain off and just being like, oh, election year and halving year equal bullish. I buy coin. I mean, there's 1,000 ways to overcomplicate it on the lower time frames, and for good reason, because there's all this noise and bullshit. But I feel as though those that can actually turn their brain off might actually have the upper hand. So like here, first year, there's like overlap here. I'll move these to the top. Okay. So here's the Bitcoin halvings. Just give me 1 second to finish this. Top.
By the way, Max, before you do that, just quickly, I absolutely agree with this. And I think that what you pointed out with that bullish scenario is why we all remain macro bullish. But you still have like lots of time until November. And in that time, I think that's what even Tommy is thinking, that like you can get a puke, right? Like the same one you had there in basically every cycle.
I think we already had
like
that.
The local one.
I mean, we went down almost 30% from the all-time high, is what I'm saying. So I feel as though the worst of the puke is behind us. Additionally, I don't think that there's a macro reason to suggest that there is enough sort of cracks in the system or deterioration. Not that they won't materialize at some point, but I don't think that there is justification for some sort of like liquidity crisis or like bank collapse, right? Unemployment is still at 4.1%. And historically, right, if people want to point to June of 2019 and say, yeah, like typically when there's cuts, we get a sell-off. Okay, well, let's talk about that as well. If this is a prolonged version of June of 2019, we still have 2 months of rallying. Okay, like we're not supposed to get our first cut until September. So are you suggesting that the market is going to front run cuts by 2 months? I don't think so, because it didn't over here. And if you pull up the S&P 500 now and we do the same exact thing, it doesn't do that. Like it trades based on there being a catalyst for here. I posted an example of this in the Discord, right? Like let's talk about this being a June of 2019 type of situation. I still think people are early to that one, right? Here's the S&P 500. Here's the Fed funds rate. It's like, let's even go and look at June of 2019 for stocks here. So here's your pause, right? I'll put this in green because things get real frothy and nice. Things rally. This is the S&P 500. Here's your Fed pause, right? Things are really good. And then nothing starts breaking even through the first batch of cuts. They were more like mean reversion cuts. And then we had COVID, obviously, right? So then the first batch of cuts was actually bullish, and the market continued to rally for 200 days after the first 225 basis point cuts. So it's like, I look at this and I go, why would we get bearish when we still have 60 days left of our Fed pause, presumably, okay, which historically has been really solid for risk. So we'll be out here middle of September, roughly right around here. Fed pause. And then additionally, if we don't see people lose their jobs and unemployment creep above 4.5% until next year, potentially, what are we even like, what are we bearish about? We could just continue to just do this, right? Like we did that over here in 2019. And if we don't do that, then yeah, maybe there is an expiration date, right? Like let's look over here in 2008, an example Tommy was talking about, right? Here's the Fed pause, and then we start to get cuts, and within we'll look for the first actual break of structure over here. It did take a little bit of time for it to roll over, but basically when we were done with our Fed pause, which was right here, basically we were in distribution. You know what I mean? But either way, we still have 60 days left of this. So I just still feel like calling for like dramatically lower prices on anything is not justified. Either we're in June of 2019 and something's about to break end of this year in September, October, November, and you get out regardless, or we're going to see a true June of 2019 where nothing is going to break and people aren't going to lose their jobs until sometime next year, and we actually have a lot more time. Okay, so I don't know. I just still think it's early. Like, I don't know why anybody would start exiting the market before the first rate cut. Historically, there is no reason to do that.
Yeah. I wanna just share this too, right? Like this is every single halving year price action. You get the price action we're having, right? It's like, yeah, we're like in a bull market and the halving happened and whatever, but like every time you get some sort of correction in a halving year, like it's not the end of the world, right? Like what comes next every single time. Okay. Like,
You forgot to write "it's over" in each one of those boxes,
yeah,
Hybrid.
I don't know. I just don't this has happened every single time. Like why would this time be different? Right? I don't know. You know, unless you really think everything is going to melt down and this is like the cyclical end of a whatever, like 15-year cycle that includes equities, right? Then I don't know. It happens every time. So I just don't see.
I'm adding on the election year and the halving. This is what I
Yeah,
wanted to show here. So it's like
exactly.
grind up into the halving and the election, then 385 days of green. Same thing over here, grind up into the halving and the election year, 392 days of green. Grind up into the election. This was a lot of turbulence because we had COVID, right? But bottoms in, you're grinding up. Your trajectory is in fact up, even over here in 2020, into the halving. Then you get the election. Then you get a year before the top is in. Same pattern every single time. And additionally, between the halving, which is the black line, and the blue line, which is the election, you get garbage price action with a big scary drop. Same thing happened over here as well, right? We're doing the same thing in between the halving and the election that we've done the past 2 cycles. So I don't know. I'm trying to turn my brain off here. I genuinely am trying to turn my brain off because I feel as though that's a scary high time frame pattern to trade against, but I don't know. It could be different, right? You always have to consider that, but I don't know. It seems pretty repetitive to me. Jack, I see you cooking something up. What is that?
The only thing I see different here, Max, is your green box. I think it is a little overextended on the right side, but outside of that,
Ignore
I
that.
align
I
with all
just threw
this.
that up there as a visual. Ignore
Yeah,
that. It's not a projection or anything.
I think outside of that, like everything else here is like right on point. This is my mindset, right? It's turn brain off, understand up, and shut up or put up. There's a lot of people who talk a lot in this market, but they're not putting their money where their mouth is. I know the team is, but like a lot of people that talk in this market that put no money really at all in this market, they're not putting figures in here. They're putting maybe a couple $100 and gambling on some bullshit.
Mm-hmm.
And for me, I'm looking at this like, and I know, I think it was, sorry if I butcher your name, Alhuzan, maybe Azal. I think it's German, but sorry if I butchered your name again. So I think that he asked, so you think there's a black swan? Nobody knows a black swan. Why is it called a black swan? Because nobody knows. You could say you knew, but you're lying. It's called a black swan for a reason. Nobody knows when it's going to occur, how it's going to occur, or if it's going to occur. If it's going to occur. So discussing black swans is like discussing what the weather's going to be tomorrow. None of you are weathermen. So why are you trying to talk about the weather?
Yeah, I mean it's simple, right? Like you're bearish below there and you're bullish above this line.
Precisely.
Whatever happens in between doesn't matter. Okay, like this is it's what I drew. Like it could just do this until you flip one or the other, and then you can make a decision. But I don't think it makes sense to get super bearish on a range reclaim. Like I get the shoulder argument, and I see the fractals with equities, like I do, but I don't know. Until you lose the yearly VWAP or until you flip this, I think you're in a holding pattern. Truly. So, and also this was the most obvious bottom of all time.
What do the likes look like before we continue pushing forward?
I don't know.
I think we should take a look at that just to make sure we don't need soybeans.
What's the take on the fees on the ETH ETF? Because I know that could be problematic, right?
Soybeans is going to be definitely the opening page on BB terminal.
Soybeans, Max, I'm ready.
Soybeans, it's time. Get it up.
I'm ready.
All right, guys, you have earned it today with doing such a poor job of liking the stream. You've earned this one, guys. You earned this one. The likes are in shambles. You guys have earned it. You've worked hard at not working hard, guys. This is some good stuff. If you are enjoying the content, do us a solid. Please consider liking the stream. It really does wonders for the show. It does wonders for the growth of the channel. And we greatly appreciate your guys' consistent, continued support of what we are building. Guys, we're growing so quickly. It's thanks to you guys. We need some likes, guys. Let's run the likes up. Let's get to at least 200. All right, there we go. We got 200. Let's get back to the show. Not too bad. Not too bad.
They just waited for the soybeans.
They wanted the soybeans.
Oh no, it's over, guys. Oh no.
I normally don't announce this on the way up, but I gotta run, guys. But just so everybody knows, I'm not just like flipping off the show and like disappearing.
Will's running from a tough discussion.
Well,
Well,
do you know that meme where there is the guy, he makes that hand sign and then he disappears? That's what, yeah, legit. That's what they should have done. Just bang and then disappear.
That's what I want to see, man. That's what I want to see right there.
Yeah, I mean, that's the level. It's 63 to 62, man. You got your point of control, your value area low, and your monthly open. Doesn't get much better than that.
Yeah, I need to see this hit. Need to see it hit. Let's get it perfect.
It's definitely level to hold because below it gets quite dangerous.
Right there. If you lose that, I think wherever the CME gap is, you're getting that. You're filling that for sure. But
do you think that cluster below would hold us if we were to get it? Yeah.
I don't know. I wonder what the volume looks like on that. Did I extend right now?
Like, I cannot stop thinking about what Tommy was saying with the German government. Like, the fact that, like, I saw that they were selling to open market, but it makes so much more sense that they were selling to market makers. They created fear, right? People sold. Now it went higher. This is where market makers distribute to FOMOing buyers back while they stop shorts. It's just like crazily evil move, which I could totally see playing because Bogdanovs are eternal in the Matrix.
Yeah, I feel like this is your zone you got to hold right here. I think that lines up with the CME gap too, probably 58 to 59.5. Yeah, but I think really it's this. Like, I don't really care about this zone. Really, it's just the yearly VWAP, man. If you lose that again, I think you're cooked for a little bit. I think you're gonna run that fractal to like here, and then like if you lose that, that's your bid, right there.
Yeah, like that 51K liquidity is still super juicy.
Yeah, like that's your bid if you lose all this. But I think you gotta lose it first, though. So because what did the equities hit their 1618? Man, I don't like that. I don't like that at all. I don't like it one bit. Right. Boom. Yeah, that's rough. That's a tough look. I mean,
do you remember when you did it on Pepe?
Yes, it was the time.
Bro.
You gotta hold that, man.
I think you could hit that gap below it. Fill the gap right there.
Yeah, you can do that.
Yeah, you could fill that.
that's tough. We should put it in log. Maybe that'll help. Yeah, that helps.
That helps.
That helps a lot.
Yeah. Study fitting your bias.
Yeah.
Jackus, what's your bias here, man? Are you thinking we're going lower, or are you kind of just like 50-50, not sure yet?
Locally?
Yeah. Like, what do you think, like 2 to 4 weeks? Do you think we go back and retest some lows, or I mean, are you unsure? You're 50-50. You don't know at this point.
This is probably one of the most confusing times, conflicting times on the mid time frames or so, because it always comes to the time frames. And again, you can have someone that's bullish on this time frame while the other talks on the other one. So when speaking of the next 2-3 weeks, like as I said on the BB call, right? Like I am seeing both good bullish arguments as well as bearish arguments, and I still tend to lean more towards the bearish one with Tommy, but I am, and Max, you know how I am like playing this execution wise,
Yeah.
on certain alts.
Mm-hmm.
So I like I'll be good regardless of what the market does, right? Because I think that's a good way to play this. But it's always about that emotional victory, right? Where you can be like, "Oh, I was wrong. Oh, you were wrong. Oh, I got it right."
I just want to make some
So-
money, man. I want us to just move higher so we can make some money,
Yeah.
But yeah, I hear you.
I think this 100-point range is what I'd look for on the S&P. You got point of control, gap. I think a little like one of these, right? I think a little like retest of the cloud, maybe. I mean, people might think it's over if we drop from the top. If we dropped,
So when it comes to SPX, Tucker, I do not think, like, let's say we are sort of around the top, right? Like in maybe like 1 year, 2 years, we will look back and say like this was around the top, right? Even if it is, I do not think it's like straight down from here. I think like there will be lots of complacency shoulders, even if it's right here.
for
We
sure.
could even
That's only 3%, right?
Yeah.
That's not
And
a
so let's say we even dip lower than that, right? Like let's say we drop to like 5,100, right? We can still make one more new all-time highs. And in this sideways action on equities, we can have both the drop on BTC and then wild upside on BTC. Like you know how crypto can get very quick in a very short period of time. So I do think that the equities are rather like nearing its topping formation here. But again, it's very hard to play this timing wise. Because I think that I know you guys are kind of laughing at the 4.1% unemployment, but given like the context of and confluence of the stuff that we have dropping CPI, we will have the inverted yield curve crossing back the zero line, and you have a rising unemployment, which like 4% was a big benchmark for lots of people not to cross. I think again, I do not think that this stuff doesn't play out over a week or a month, right? Like this stuff takes time to unfold. Like you're basically rate paused for a year. So as I said on equities, I do think that it can take a while. We can drop to 5.1K, and then still head to new highs. But essentially, we would be like top ranging, right? Or slowly grinding upwards from here. I do think that in that time, crypto will like do really well, but I cannot rule out the local drop. which is why it's so confusing here locally speaking. I do think that, you know, I still am having a hard time that the unrealized losses for the banks, which are the highest in history ever by like insane margin, will just go unnoticed. I think this will sooner or later flow into the markets. But again, the question is timing. And that's like what I was saying to lots of macro bears. You guys remember how bearish everyone was last year, and I was saying that equities will go to new highs because you need to play the timing well. And until then, you know, you still have a pretty bullish market with bullish structure, and you know, as long as the market stays paused, you have lots of room to go upwards. And I gave reasons why the rate cuts will not happen for a year, while everyone was saying 13%, and I was saying Q3, Q4, 2024, we will get first rate cuts. So that was my take back then. I still think it's playing out to a T, but again, the timing here will be tough to manage.
Yeah, on the rate cuts, right? I think you kind of got to get back above zero, though, right?
Like lots of people mistakenly think that when you get below the zero line, that's where the recession starts. But it's actually when it's crossing back off the zero line.
When it starts ripping like that. Yeah.
Yes.
Okay, let me ask you a question. You mentioned unemployment, Jackus. Let's say on the next U.S. unemployment print, it's at like 4.1 again, because we could buy ourselves quite a bit of time if unemployment just starts moving sideways. If we continually move up, the next print's 4.2, the one after that's 4.3. Then I feel like people start to panic because they know what's coming. We're trending hard. We kind of need to move sideways, you know? Because 4.1 alone is not enough to cripple the economy. Not even close.
No, like itself, it is not. But also, there is a big difference that you have lots of like these government statistics are very much manipulated to a large degree. So when they look at unemployment nowadays, right, they will include part-time jobs, and they will also include insane amounts of government jobs, right? So they will like pay people just to basically take one paper from one box to the other. So I think it's more about the trend that the unemployment is taking. Maybe Tucker, if you can go back to that chart you had there and just add unemployment to it, that would be interesting. But
I think the thing that I'm like most concerned about is in 2008, the market had already topped by the time the first rate cut had happened. So they had already anticipated what the rate cut implied and smart money had already started distributing at that point. And I highlight that for a reason, because I think I don't think we can just compare it to 2020. We have to compare it to 2008 as well, you know, because these are some of the previous times where rate cuts have occurred. And in 2008 specifically, the market had, like I said, the market had already topped. And I'm not saying that equities have topped, but locally, the market had already topped before the rate cut had been actually baked into the market.
Are you talking about the S&P 500, Tommy?
Yes.
Can you add, just quickly, Tucker, can you add? Yeah, awesome. Go on, Max.
Yeah, I don't think the market had already topped. I think it was in distribution, right? But here, let me show you my screen. Maybe we're looking at different things. Here was the first rate cut in June of 2007, right? So like, yeah, we were basically at our top, right? I mean, very close. We technically went up and had like a predatory, you know, bear or, you know, bull trap right here at the highs. But I would say before we actually rolled over, right, and had like a true break of market structure, which ended up then being, you know, this is a clear complacency shoulder right in here. And again, market was already down quite a bit, right? But then I think we can all agree this is your classic textbook distributive bearish underside retest, right? That actually came. So the market after the first cut, the pause was over in 2007, going into 2008. From the time we had that first cut until like, hey, it's over, it was still another 200 days of distribution. And then the pop into the complacency shoulder was a year following the date of the first cut. So I'm not saying you're wrong that we're near a top, but I'm just saying it could literally be, if this is a 2008 style situation, we could have 300 days before our complacency shoulder, if we're going to do something similar, actually happens, which would be in 2008, Fed funds rate was at 5.25. We didn't actually start aggressively selling off until May of 2008, where the effective federal funds rate was already down 300 points. You know, we were already into multiple cuts.
That's literally what I'm saying.
No, I know you're saying that. Tommy said that we were already, I was talking to Tommy about his suggestion that we had already topped and we were selling off into the first cut.
I think that Tommy also like could see a scenario where we will be top ranging for quite some time. Like it will take some time to distribute here. Like
does that not look like the Bitcoin structure to you guys? Am I just hallucinating? Like this squeeze off of into a complacency shoulder, is that not what we're doing right now on Bitcoin? Like, am I crazy?
Oh yeah, no wait. I thought I'm confused.
Is the red box not where Bitcoin is at literally right now?
Oh yeah,
let's do it.
What I'm saying too.
That is my concern, is that Bitcoin is literally in the red box right now. That's what I've been trying to communicate.
Yeah, me too. Like that's why I have so many concerns, but I still do like see like it's really conflicted period of the market.
So Tommy, you're saying we're in the red box right now.
That's my fear, yes, with Bitcoin specifically.
Yes, I mean it could be. It looks a little different to me, but yes, like I could see it, but also different situation, right? So let's add on Fed funds down here as well. It's earlier. This would be playing out much earlier than 2008, right? Like we're still in our pause. So this bounce happened 300 days in 2008. This happened 321 days after the first cut. So we're still 60 days out. So we're like over here then, if this is happening. We're still 60 days out from our first cut, and the complacency shoulder would then be technically 415 days after where we're at right now, if this is what we're doing. So contextually, I see some differences. Structurally, you could make the argument this is a shoulder, right? But like the environment of a Fed cycle, it's different. And additionally, at this complacency shoulder in 2008, if we're right here and we're talking about unemployment mattering, the US unemployment rate at the point of that complacency shoulder was at 5.6%, 5.5%. Right now we're at 4.1. So I still think it's early to suggest that contextually this is the type of environment and shoulder that we're leading into. I see from a structure standpoint how there's some supply overhead similarly to how there was over here, but this could potentially come 415 days later. But if there's anything we do know about crypto, it's that it should in theory top before equities. So that would bode to your point.
How many days have we been in this range? I'm curious. Just because I know I'm thinking like, if it's based on the same time as equities, we should divide it by 3.
140 so far, roughly.
The session is like 8 hours.
Just to quickly jump in between two of you, I feel like I agree with Tommy in that regard that BTC is at that complacency shoulder, or like that. Those are my worries, right? Like I'm not trusting this move as much, probably. That said, I do not think. I think, as you, Max, that for equities it will take probably that time to really distribute. Where like it's not going to be a straight line down from here for equities. And I do think that in that time period, we can still have BTC drop sub 51, while then running really high still in that time period, right? If that makes sense.
Yeah.
What do you guys think of it?
I
No,
agree with you.
More so, right? Like, given all the unemployment and the Fed fund stuff, I would say it's probably more likely that structurally this is that, like, you get the third drive down to 52K, if like at worst, right? Compared to nuking like 2008, right? Like, does that make sense? What I'm trying to say, like,
Say
at worst, you put in a third low, like those, whatever those equity structures we were looking at earlier, right? Like you hit the 52K and then go, like, contextually given the Fed funds and unemployment, right? Like that's your bear case, right? Like, and even more so looking at the S&P, like I would say you're in that, like, what is that drop before it started going up, right, Max? Like, what is that, 2007? Like maybe like May 2007, like it had that big drop and then it went up.
This was like right
No,
here you're talking about? This was
back
right here?
before the top, before the top,
Right here.
right there, like
That was
that.
March. That was
Yeah,
March.
that maybe, like, not structurally, but like in terms of a drop before that, given where we are in terms of rate cuts, right, makes more sense even.
I mean, yeah, that's my argument. Like my thought the entire time, like market structure aside, you guys know this. Literally for like 6 months, I've been planning and hoping that I get the opportunity to de-risk later this year, like right around the election, in anticipation of something going wrong in the U.S. equity markets. I was willing to accept that that's probably a little bit early given how long things can take to actually roll over. But historically, like it would be very atypical of risk to roll over so quickly, barring a black swan event, while we're still in a Fed pause and unemployment is still at historically attainable and also historically low levels. Like that is just a fact. Not that I would rule anything out, but it would be very atypical to see such a dramatic and pronounced, like it's over, like everything's dropping. We're front running the Fed cut. We're front running unemployment spiking. Like we're going to front run all the like 6 months of economic data, and we're going to sell off everything well before that. Like that hasn't happened before. Even during COVID, when we had a black swan, you still had a very kind of typical Fed tightening cycle where it's like things rallied all throughout the pause, and then things topped pretty quickly after we got cuts, which we haven't had cuts yet. That's coming in September. So it's like I just feel like it's still early to. It feels early for me to think that like things are broken. It does. Like I don't see it yet, but I'm willing to accept that this time is different. I just don't. I don't know, Tommy. What do you think about the timing, man? Like, I mean, we're looking at the timing right here. Like, do you give any credence to the possibility that it could actually take like another 300, 400 days to materialize, or do you think it's pretty high degree confidence it is like soon?
I mean, it could take maybe a few more months, but I think, history, at the very least, smart money has history to go off of, right? I don't know if it's going to take as long for downside to materialize in the market if they're going to cut rates and unemployment is beginning to tick up. I think that you're probably going to see some front running of that. But I also don't really think that equity markets are really in a position where they're going to enter like a 2008 level cyclical downtrend. I think it's more probably applicable for risk markets like Bitcoin, that really haven't been able to sustain the same level of bid that we've seen from the S&P and that we've seen from the NASDAQ. And I do think to a large degree as well, like I know the Mag 7, NVIDIA has obviously been the reason why, or the biggest reason why we've continued higher. If NVIDIA pulls back, Apple really does not look that bad to me. Like I do think Apple moving higher can mitigate to some degree downside in equity markets. I'm really not like that bearish on equities. I think the volatility index looks pretty fantastic over like a 2 or 3 week period that we're heading into. And I do think that will probably materialize into downside, but I'm not quite as bearish on equity markets as I am with crypto. I just see cyclical and structural similarities with Bitcoin and things like the S&P. And then of course with ETH and DeFi, I see similarities to the NASDAQ in the same time frame. So I do think there are some cyclical warning signs specifically with crypto and risk markets. But I'm not necessarily just going to go full bear on equities, but I do think that the comparisons are there for Bitcoin and crypto.
So just to cook up on the unemployment, right? So I actually have some different one, not in percentages, but like I do agree that historically it's not that bad, right? Like absolute values, it's not that bad where we are, 4.1%. Again, I think this number would be way higher if there were not so many imaginary created jobs from the government and partial jobs. But like absolutely, it doesn't matter. I think what matters more is the trend, right? And when I look at this chart, right, so at the top you have the inverted yield curve, in the middle you have SPX, and at the bottom you have the unemployment. And so whenever they're like crossing below the zero line, which means you have inverted yield curve, and then when you were crossing back up is when and you had the confluence of like the unemployment changing its trend higher was usually the signs of a pretty significant pullback, right? So I still think we have some time. Like I do agree, Max, that like this can easily keep going to like 4.5%. At that point, that would be quite concerning. But like we still haven't had that rate cut yet. We still haven't crossed above the zero line. But I mean, the signs are clearly there that it's shaping up to be, right? So I still do think that like this will take some time to unfold. I mean, technically, right? As you said, you can still wait for this to unfold. Like wait for this drop, right? Unless it's some type of like COVID situation, which is very rare. Then you would still get like this, right? Or like the initial sell-off, which let's say we are topped here on SPX, sort of. So like what can happen is you're going to get dropped like this, but then another swing higher, and you can start to get like a rollover like this. Like it can take time before it actually unfolds. And in this time period, right? I know this looks like nothing, but listen, this is half of 2025. You can still get crypto to run a lot by then. So like again, as I said, I think the signs are there already. I'm having a hard time thinking that the largest unrealized losses will just go unnoticed and nobody is going to take this free liquidity away. But playing the timing is going to be the toughest spot.
I think the mistake that a lot of people are going to make is that they assume that it's going to happen really quickly because of recency bias with COVID, because it did happen really quickly with COVID. And that was a really unique situation where it probably won't happen again. We can only hope that it won't happen again. But like, as you were showing, Jackus, like that doesn't look like it's a long time. That's like what, 6 to 9 to 12 months from now, potentially. It could take a long time.
Yeah.
Exactly. So like it's not like a jet ski where you can whip a U-turn. It's a big cargo ship where it takes a lot of time to turn the thing around,
Yeah, exactly. So I think that in the time period you can still like have BTC do both, sub 50K and above 100K, if that makes sense.
Well, I think that's a nice note to leave off on. We've been going for about an hour and a half. I actually really enjoyed today's show. I like when we don't all agree. I really like when we don't all agree because I feel like it forces us to all be sharper and really explain our thoughts, where when we're all in agreement, we can just be like, let's fucking go. We're going up. Or, I had a good time. I hope you guys did too. I hope the audience enjoyed that because you really got to see a very thoroughly thought out thesis from everybody on this panel. So it's a unique time in the market, and it's an even more unique time that the panel is completely split, which should just show you how difficult this market is, because we've all been pretty successful over a high time frame. So anyways, Tommy, I'll kick it to you to say a final farewell.
Yeah, for sure. I saw a comment earlier in the show that when the panel disagrees, the alpha is better. So I do tend to agree with that sentiment as well. But we can wrap up the show now, guys. A reminder, of course, that we have launched our brand new hedge fund, the BB Wealth Management. That is specializing, of course, in digital assets, guys. And a reminder that we specialize in a way that takes into account, obviously, crypto's asymmetric history for upside returns, as well as the investment risks posed in any market. So becoming an LP or an accredited investor is something that interests you. We are, here's the thing, guys, we are excited not just that we get to trade it, but also that we can offer you guys, the community, the opportunity to be involved as well. So we do have more information linked in the description below. Make sure to check that out if that is something that interests you. We also have the BB Academy, guys, which we rolled out a few months ago, but of course, the value proposition on it has not gone away at all. It's not often that you get to learn from so many traders with so many different styles on how to approach the market and build a truly strong educational base. I'd put it up there with any other course in the crypto market right now. I mean, I think it's exceptional educational material. And yeah, whether you're trying to hone your educational base, add to your skill set, or anything in between, it's going to be perfect for you. But we do have more information for that linked in the description of this video as well. Talking about programming, guys, market check. We had a great market check today. It's like I said, when we disagree, we do tend to share quite a bit of alpha. It does bring out, I think, the best in everybody. And if you enjoyed today's show, we will be back for another episode tomorrow. It will be the last show of the week. We will be live, typically starting around 11 a.m. Eastern Standard Time, and that's true Monday through Friday, right? We are live every day that the New York Stock Exchange is open, as far as I know. As far as I know. But yeah, also make sure to check out Market Talk with King Wabi. That is a Twitter space where the flavor of the show very much takes on who are the guests. So if you enjoyed Market Check this morning, maybe you want a little bit of an afternoon market talk, no pun intended, to continue to whet the appetite. It is perfect. It will probably be perfect for you. So make sure to tune in for that as well. But that is it from us, guys. Like I said, we will see you tomorrow morning for another show, bright and early. But as always, y'all stay safe, and thank you again for tuning in. I didn't see if they hit the like button, but I'm gonna assume that they did better than.
Let's see. Hang on. 256. That's not bad. That's pretty good.
I'm gonna expect them to bring it tomorrow. I'm gonna expect y'all to bring it. So y'all be prepared for tomorrow. I'm gonna bug you about it. But that's it from us, guys. Thanks again.